Candlestick signals prepared investors to be aggressively bullish today, even before the market opened, based upon the doji type day at the T-line, followed by a gap up on Friday. That in itself would have put the prospects of more upside likely to happen based upon the best friend signal, the doji followed by a gap up. Add the prospect that it gapped up to the resistance level of this wedge formation. Also gave high probabilities that if we woke up this morning and saw everything trading positive, you wanted to be buying aggressively right on the open, because that would tell us that this level, because of a strong bullish signal, was not acting as resistance anymore, that essentially we had a wave one, a wave two wedge formation, wave three going into a wave that would equate to a wave one. Further confirmation would have been illustrated in the transportation index, that ever since it reversed, on days that the markets in general were kind of just indecisive, you can see the transportation index was very strong. Add to the fact that when they went through the 200 today, they didn't do it in an indecisive fashion. The bull candle told us there was no more resistance at this level, that wave one, wave two, wave three was now in progress. Knowing what each signal and pattern represent allows the candlestick investor to extrapolate the fact that we had some gap ups and a gap up from a doji in the NASDAQ was also a best friend signal in the process of forming a J-hook pattern, also implying more upside. So when you get this much evidence that the bulls are in control, that way you can trade much more aggressively to the long side, knowing that there isn't any real severe investor or bearish investor sentiment in the markets. The candlestick investor has the advantage of knowing what should happen based upon individual candlestick patterns. Such as in MLCO, it could be seen that a scoop pattern was setting up. Additional evidence was a doji right on the 200-day moving average with bullish confirmation, followed by a doji sandwich, knowing that there's going to be more upside. This formation right in here with the bullish signals was confirming that a scoop pattern was in progress, allowing investors to get in this area with the expectation that if they broke through the handle, you had a slingshot effect, a big strong upside. Now, the rhetorical question always is, do we get big, huge moves on these type of signal and patterns every day? Definitely not. But it puts you in position where the probabilities of being in these type of patterns are extremely strong. As illustrated in our trade on Cena, you could be buying going into the close on Friday, knowing that a kicker signal more than likely has a strong move to the upside, with just the probabilities of the results of what has occurred in the kicker signal for centuries. This gap up, big strong price move was based upon the kicker signal kind of scoop breakout, telling us that our upside potential is probably up in this area. Again, not only do the signals and patterns tell you when the move is going to be in your direction, but they also indicate which moves are going to have the strongest price moves. Candlestick analysis is merely the graphic depiction of what happens in human nature time after time, allowing us to be in strong price moves an inordinately high percentage of the time. That'll be it. We'll see you in the chat rooms.